All right, we're live, we're live, we're live. So if you can see, please confirm you can see my screen very quickly. If you can see my screen, let me have some confirmation. I can see your screen, I can hear your voice. Quickly, quickly, quickly. Mm. Let's run this morning. If you can see my screen, if you can hear my voice, please confirm. Okay. PDHC. Okay, let me use variance. If you can see my screen and can hear my voice, please confirm. Okay. Right. Good, good, good. Let's go, let's go, let's go. So, good morning, guys. Welcome. It's good to be back again to this analysis class for a while. I've been off. Okay, so very simply, I have no much time to spare this morning. I want to just share with us what I have, have said to be my brainchild. It's not a new concept in the market, but of course, it's what I saw and tested and saw the power of this. So, very importantly, join here now. Sorry. So we're still talking about previous day high and close and previous day low and close. That's the whole concept of this edge. Okay. The whole concept of this edge is on previous day high and close, previous day low and close. So write on the chat box, everybody. Previous day high and close, previous day low and close. That's the origin of this whole concept. Previous day high and close, previous day low and close. Everybody, previous day high and close, previous day low and close. That's our origin. That's the originator of all this. What I want to share with us: previous day high and close, and previous day low and close. That's the first thing we want to identify. Previous day high and close, previous day low and close. And what this will do for you is that I have something I want to say here. This is so simple. I said it yesterday on the voice notes that you might want to miss out on this. It will be the simplest head you've ever had. I can assure you. What this will do to you, it will help you to be able to notice market signals before anyone else. You can be able to predict or know what the market will do that day before anybody else with this previously high and close and low and close. Yesterday, I had at least 3 hours of backtesting. I've backtested this over and over again. I've seen this play out multiple times, but don't take my word for it. Do your own backtesting too. So the first point is what I dealing with previous day high and close and what previous day low and close. Do we have that already? Good. Now next, if the previous day closed bullish, that's when we are going to have our previous day high and close. So so now you shorten it. So PDHC is for high and close, PDLC is for low and close. So for PDHC, it is a bullish day. So when the day closed bullish, that means the candlestick close bullish, what you mark is what? The high and close of that daily candle. When the candlestick closes bearish, what you mark is what? The low and close of that daily candle. That's your first step. So when yesterday closed bullish, you can see that I have already marked my what? Previous day high and close. That's step one. Assuming yesterday closed bullish bearish, I will have marked what? Previous day's low and close. So this is what I'm going to be having. All these concepts you are seeing. The first one is what? PDHC for what? Bullish day. PDS for what? Bearish day. Like I said yesterday in the voice note, we are still going to be using our Asian range, our discount and premium, our order block, fair value gap, candlestick, and what? Character change. And market structure for direction. Those things will still be there. So let me add here too. Let me also add market structure. So we are still going to be using our normal concepts. We are just simply understanding how the market will move before anybody else. So market structure is for what? Direction. Our DLC is still intact. We are not changing strategy. We are not changing our approach. It's still intact. But this will help you to know what the day will do before anybody else. I've done this back testing. So let me just borrow me just 1 2 minutes. Let me just do back testing for this week. Let's just back test for this week before we come to the main chat for today. So let me first screenshot this guy and send to us, right? While we go into, let's just backtest last week into this week very quickly. Do you allow me for that? Let's backtest this now, last week and yesterday, because today is Tuesday. Can I move ahead? Let's quickly backtest this. Yes. Can I proceed? Let me send this to the group. Okay, great. All right. Oh, Shapalaka Paradida Badios. Good. So let me quickly delete everything here. Done. So I'll go to my daily candle. Daily candle. I gave us how many variants? I gave us 4 variants, right? First variant is what? Bearish to bullish. Second variant is what? Bullish to bearish. Third variant is what? Bullish to bullish. And last one is what? Bearish to bearish. It means market can either do any of this. So that means if the previous day was bearish, right? Bearish. Bearish day, Abi. So the next day can either close as bullish or what? Bearish. It's as simple as that. If the previous day closed as bearish candle, it means the next day can either close as a bullish candle or what? A bearish candle, right? If the previous day closed as a bullish candle, the next day can either close also as a bullish or bearish candle. So that's where the variant came about. Bullish or what? Bearish. So this is the trick. So the first is you want to know how the previous day closed. Then you now speculate on how the next day will close. So let me give you an example of bearish to bullish. Let's start with bearish to bullish. Okay. Look at this particular day. This is what? Friday. And this is what? Monday. So Friday to Monday is what? A bearish to bullish variance. Can you see? Follow me carefully. Monday to Tuesday is a bullish to bullish variance. Tuesday to Wednesday is a bullish to bullish. Okay? Before we go into the details, I'm giving an example. Look at this day. Thursday to Friday is a bearish to bullish variance. Tuesday to Wednesday is a bullish to bearish variance. Wednesday to Thursday is a bearish to bearish. Friday to Monday, that was this week. Friday last week to Monday yesterday is a what? Bullish to bullish. So there's no other way. If market closed bullish the previous day, it can either close bullish the next day or bearish. So this day now, this Monday to Tuesday was the bullish to what? Bearish. So let's now go into details. So how do we now know what to do? So the first step we do is to mark your previous day high and close or previous day low and close. That's step one. So one, mark what? Previous day high and close or what? Previous day low and close. That's step one. Come to your daily candle and ask yourself, how did the previous day close? Bullish or bearish? If you close bullish, you mark your high and close of that candlestick in a rectangle form. If it closed bullish, that's what you will do. If you closed bearish, what will you do? You mark the low and close of that candlestick. That's all. Step one is clear. Is step one clear? You mark your high and close or what? Low and close. That's step one. Let me see if you are following. Okay, great. Now, step two, you simply just drop down to your 15 minutes. That's all. So drop down to what? 15 or 5 minutes and wait for your Asian range to form. Now we are going to use the Asian range, whatever. So drop down to your 15 or 5 minutes for Asian range for arts. What we call our Asian range trading strategy. We now want to know how the London wants to open. That's what we are doing. These two steps. So I don't want to give us more steps. We first mark out what previous day high and close for bullish or bearish, then drop down to what your 15 minutes of 5 minutes for your arts. That's all. Now let's pick, for example, let's do this. Let's do Friday to Monday. Friday close bearish. What will I mark? Everybody, Friday close bearish. What will I mark? I'll mark my what? Low and close, right? Friday close bearish. I'll mark what? Low and close. Friday close bearish. I'll mark what? Daily low and close. What's my next step? Drop down to 15 minutes or 5 minutes to now see how my Asian range will form. Now, looking from this place, there was a gap when the next day opened, right? It closed there and opened there. There was a gap, but don't mind any gap. Don't mind, just do the process. Come to what? To 15 minutes or 5 minutes. So now watch. So on 15 minutes, what I'll do is I'll adjust my rectangle. Just follow the process. I'll adjust my rectangle, my zone. I'll pick it from the New York Open of that day. I have my reason for that, so I can have a good range from previous day to next day. So I will adjust on 15 minutes now. I will adjust this rectangle. I'll bring it to what? New York Open, 14 o'clock. Okay, right? And I will end it at New York close for that Monday. That's 11 o'clock. So Monday, 23 o'clock. So this is my what? My previous date what? Low and close. Now, what do we observe? We had a gap. We had a gap. So the next step is for us what? To understand how the next day will now play out. So my Asian high, Asian low is already trading above previous day's low and close. So this is the gimmicks now. If previous day closed bearish, okay, if I want to expect a bullish day, that means price must trade above the close of previous day. price will trade above the close, above the low and close. That's all. For a bearish to bullish, this is what I want to see. That price will trade above the low and close. Okay? Then if it's going to be a bearish to what? Bearish, because it can either be only these two. It cannot be more than this. It can't be more than this. If it's for bearish to bearish, what do we expect to see? Price will trade below the low and close. Write these two things down on the chat box. Write these two things down on the chat box. This is all you are doing. I told you guys that this is very simple. That you might want to miss out on this. Market can only do two things when price closed bearish for the previous day. So Friday closed bearish, right? So Monday can only either be a bullish day or a bearish day. If it's going to be a bullish day, what do you want to see? We want to expect price to trade above the low and close. And this is our low and close. We have drawn the mark. So when we see price trading above this guy, we are bullish for the day. You now apply your Asian range, your demand, your supply in alignment to your previous day low and close. If we want to trade bearish for the day, price must trade below. That means we will see price come and what? We see price come and trade below, and we sell for the day. If this is making sense, give me my love language. This is just step one. That's just step one. I'm still trying to. Is it simple? I'm taking my time to explain this because it's so like I said, we are only doing two things. Price can, for previous day, price can either close bullish or bearish for previous day. If it closes bearish, like our case today, our case now, if it closes bearish, what do we mark? Low and close. Step one. Now, for the next day, price can either be bullish or bearish for the next day. If price wants to close bullish for the next day, I want to see price trading above the low and close. If price wants to be bearish for the next day, price must trade below the low and close. No be fight. Now let's go back to the chart. The question is, when Asian range forms and London opens is when we will now know, are we going to trade bullish or bearish for that day. Now, when Asian range form, what the price do? Price gapped, right? That gapping of price, let's now apply our what? Our Asian high, Asian low. Asian low is here. Asian low is here and Asian high is here. This is what? V1. Asian low was swept into what? Our fair value gap, and our gap was the point of interest. We had a fair value gap here. A fair value gap was here plus a market gap. So we have two gaps. Okay. Now, this is a confluence of our location. And look at it. Boom. For the day. So before London opened, we already have a bias that today will be bullish from the standpoint of understanding that price has gone above previous days low and close. So this is a bearish to bullish variant. So if you notice, let me show you my WhatsApp. When I was backtesting this yesterday, I'll show you on my WhatsApp. I started backtesting as at I think 450. So For from next month, our back testing for next month is going to be, we're going to spend. So the way I planned it is that for the month of testing will be having 100 days of bearish to bullish, bullish to bearish, and so on like that. So we want to have all data to see how this thing has played out for the past for 100 days. So my plan is I'm going to have 3 sessions every week. So each section will backtest 10 days. Okay. For each session, we backtest 10 days. So for week one, we're going to do 30 days. Week two, 30 days. Week three, 30. That's 90, right? Then week four, the last 10. So can you see my this is bearish to bullish? Can you see February 28th? Can you see this here? February 28th to what? Monday, bearish bullish. So let me open up this for you. I've done my own back testing already. I know these are at 6:21 when I was still doing this. So look at it. Can we all see this? This is one of the back testing. So we closed bearish, right? I marked my low and close. I waited for long move or below previous day and close, and we are, let me confirm. Okay. Now let me go to the next one again. I did. Let's see. Now bearish to bearish scenario. Let me expand this. I'll just show you. I'll just go through. I'll just show you. Um, this is a bullish to bullish scenario. 3rd of March was bullish. Then 4th of March was also bullish. So let's quickly do that. Let's do bullish to bullish scenario. 3rd of March to 4th of March. Um, to show that this is also in line with our strategy. We are not doing anything outside our SMC. We are still doing SMC, but now we have an edge. Someone type an edge. Someone type an edge. We have an edge. We have an edge. We have an edge. We are still doing SMC, but with an edge of periods day low and close and high and close. This is what is called an edge. Placing you above the crowd. We have an edge. So let's do bullish to bullish very quickly. Bullish to bullish. Bullish to bullish. So don't worry, we will backtest this very well. I'm just showing you. I will now use it for today live market. So that it's not a one-off thing. Hi, man. Let's go to bullish to bullish. So let's delete everything. I go back to my daily. Let's look for a bullish to bullish and investigate it. So let me choose out the back daily charts and look for any candlestick. For example, you can just come here and say, okay, this candlestick did what? I will come here too. This candlestick did what? Bullish to bearish. I also did too. This candle did what? Bullish to bearish. What do you now do? You now go and mark what? Your previous day high and close. Okay. Extend it to what? Previous day, to extend to this day. Then drop to your 15 minutes and see how this formed. Okay, let's do this quickly. Let's do this quickly. But in this case, I can't go back to 15 minutes. It will not give me the um 15 minutes, but I think it's giving me 1 hour. Let's do this quickly. Let's do this quickly before I go to bullish to bullish. Let's do this quickly. Daily high and close, right? Then I can't do 15 minutes, so let me do 1 hour. Let me go to 1 hour because it is too behind. But I think I can do 1 hour and 30 minutes. Yeah, I can do 1 hour. So let's go to 30 minutes. Let's go 30 minutes. Okay. Let me show you the power of this. Good. You have 30 minutes. Now watch this carefully. What's step two? Step two is to wait for London to open. Now in this scenario, Asian range already gave us a very massive bearish candle before London even opened. We already have a massive bearish candle. So, but don't no problem. Look at it. So what this told me was that okay, the next day already started trading below the previous high and close already. So for a scenario of candle closing bullish, eh? For a bullish scenario, okay, if the next day wants to be bearish, what do I want to see? Price will do what? Price will trade below what? High and close. That means if previous day closed bullish, right, and we want to have a bearish day, price will trade below high and close. But if it's going to be bullish to bullish, give me the answer, guys. If it's going to be bullish to bullish, everybody, what will be the case? What will price do? Give me the answer. If it's going to be bullish to bullish, what do we expect price to do? Let me see if you are following. If it's going to be bullish to bullish, that means previous day close bullish, and we expect the next day to close bullish. What do we expect price to do for that day? I want a quick response. Exactly. Price trade above PDHC. Nice one. Nice one. I love that. I love that. Simple. Ah, God punish poverty. I say, see, guys, I'm not lying to you when I say this thing is what will bring out our 10K dollars. This simple thing that I just showed here will guarantee your $10,000 every single month. I can bet my life with this. Just do your job and go and back test. Once you are done back testing, go and buy that prop account because this is crazy. This is crazy. Once you are done back testing, go and buy that prop account and start your journey on 10K per month because before the end of the first quarter, I want to see at least 2 or 3 persons that already be making out 10K per month before the end of first that's by June. By June, I want to see at least 2 or 3 persons that will make their first 10K withdrawal. Profit, not capital, profit. Because this is so good to just miss out on trades every single day. No, no, no. It's so good. It's so good. So look at what we have now. Now, when Asian was forming, we already trading below. That means already, although this was too fast, but 1 o'clock, wetin happen? Boom, sell. Okay, 2 o'clock. So when I woke up, I already saw price trading below. So that means today was can't but have a bearish day. It's not for you to now look for your location during to sell. But in this case, now, what will you do if this could happen next time? You just mark out your Asian high and Asian low. So what I observed in this particular day was that if this has happened, you should know that you should not be expecting more sales again, like a good sale. So just mark out your location and take your little profit, because this particular day won't give you a good pips again, because market has already sold. We are in like oversold already. So what you're going to do now is that you're going to have just to close scenario of different case that happen. So if this can happen again, that market just sold very well, boom, Asian section, just wait for London and look at it. What is this? What is this variant for Asian range? This trending variant, abi? Trending to sell from. You sell from your what? Inside your Asian range, or what? At the Asian high. Asian range strategy. And this is it. The sell happened there. Like I said, it was a very short sell. They have a good number of sell happening in Asia. Still respect the daily bias. Direction, location, confirmation. We are still applying our supply, our order block, everything is still intact. But now we are now having it with an edge, an edge, an edge, an edge. So this is a supply zone inside Asian range. That's the first point of interest, because we can't even target a supply zone. Where's my supply here? Supply. So we have supply here as first point of interest, and we have supply here as second point of interest for a sell. So regardless the spike, regardless the Asian manipulation or the Asian whatever the gap, just follow the process. So this was a case of bullish to bearish scenario. Bullish to bearish. That means price close bullish, we mark the high and close. The next day, we are already trading below high and close. So we are already bearish for the day. Just wait for your location and confirmation after Asian range has formed. And this is what we have for this particular day. I will stop here. I won't do more. Okay, let's go to bullish and I'll stop. I promise to do bullish and bullish. Let's go to bullish. So my message. I'll do that now. Okay, let's go to bullish and I will stop. La barada de capa. Send pondo sufalades. Is this clear? Kai. Eco Paladenes. 10K they look me like this. I they look am. Ah, I was telling my friend early this month that March is our money year. So I'm a guy that loves to mind with words. I love rhymes. I love quotes. So if we spell the word March, March, is five. If we spell the word money, Money, five. And five, as they will say, is a number of grace. In terms of the Greek word, grace is not 5 letters, it's like six or so. But fine, it's in English word, grace has 5 letters. So this is our money month. So even if you don't make the money this much, what you have in this match is mastery. And I always say that the money you want, realm, definitely you are stepping into your mastery realm. So type on the chat box, type mastery realm, everybody. Mastery realm months. Mastery realm. I'm stepping into my mastery realm. You that if you apply these things by next month, your money realm is here. Your money realm is close than you think. Your money realm is close than you think. Shabarades. Your money realm is closer than you think. I can tell you by the. Oh, thank you, Holy Spirit. Your money realm is bullish to bullish, and we now look at what today has for us. I'm going to use the scenario of where we have inducements for the bullish day. So you can see that we are still applying SMC. We are still applying liquidity. We are still applying demand and supply. But we have an edge. An edge. Bank level is still there. Oh. Let's not even go into bank level yet. Bank level is for your take profits, right? And location. We still come into that. So every concept we use here as their job, as their task. Every concept we use here as their what? Their job. What is the job of PDHC and PDLC? Who can tell me? What's the job of PDHC and PDLC? As I go into the next one, what's the job of PDHC and PDLC? What does PDHC do for us? What's the job? So we are going to do Monday, Tuesday, then Tuesday, Wednesday. All this bullish to bullish and what? Bullish to bullish. Let's backtest these candles. Okay. What's the job for PDHC and PDLC? This is very tiny, but we still mark it. Good. So you have marked for Monday. Let's now investigate what happened on Tuesday. Now, from this Monday safe, we can see the power of three here. From Monday. Monday opened into Tuesday. We have open, we have manipulation, we have distribution. There was a pullback and we bought. So from this Monday safe, I can already start telling what will happen. So when Monday closed here, Tuesday opened, right? Manipulated Asian range, distributed pullback. But let's see. Happened same thing on Tuesday again. Sorry. Look at Tuesday too. Tuesday candle closed bullish. Wednesday opened. First, what did it do? Asian range did what? Asian range gave us a manipulation. Then London, yeah, Asian or London accumulation manipulation. Then distributed and what? And bought. But we'll come there. So who's answering my question? Okay. Used to determine the next day move. Give us an edge into the next day bias. No relocation of days. So okay, I will take Mr. Theophilus and I'll take Mr. Femi and I'll take Melkis. One, determine direction before others. So it's a directional bias. You get to know the direction first. Are we going to buy for the next day or sell? To determine the next day move, right? That is direction. Then give us an edge into the next day bias. Yes, that's the job of HPDHC. Now let's go into 15 minutes. I have marked for what? Monday, Abi. Let me now go into 15 minutes or 5 minutes. Let's go and see what we have. Good. This is the first back testing, right? God punish poverty. God punish poverty and his father-in-law. The precise for me. Now you can see this. What happened there? Let's now investigate this. Asian low manipulated. Now, in this case, now we said that if we close bullish and we're expecting a bullish day, price must trade above, abi. But in this case, price started trading below the previous day high and close. Okay. Now, the thing is that this is not London yet. So even if price is trading below the previous day high and close, okay, let's wait for London to open. That's the next thing to do. So it's not only about trading below or above high and low, because that might be a manipulation in this case, which it is. So trading below, we think we are selling for the day, but no, that was an Asian range. We came to what? To close above with even a V2. Asian range did not what? Manipulate the low, but Asian range traded below the low of previous day high and close. I come again. Asian range did not manipulate the Asian low, but Asian range traded below previous days high and close. For the last time, Asian range did not manipulate the low, but Asian range traded below previous days high, and that was a manipulation on the previous days place. What do we now see? A breakout. Now, our first buy innocently, our first innocent buy will be here because we had a break, a retest, and a confirmation on the candlestick by 11:30. So innocently, our first confirmation was London section buy, because we didn't know that there will be an inducement in the afternoon. So let's be realistic. Okay, let's be realistic with this back test. Okay, let's be realistic. Let's take it step by step. Our first confirmation happened during the London section. Look at it, very clean and clear. So now we have a confirmation of price breaking above. Look at it. It broke and what? Retest. Sitting on the break and retest. What's this candlestick pattern called? A drop base rally, a triple candlestick pattern. So this is our bullish confirmation for a buy at 11:30. Okay. So in this case now, we have a buy innocently. Our stop loss is what? Below 6 pips. 6 pips. Our first target is at this high, which is 1 to 2.7. Okay. Now, innocently, we target 1 to 3 as our minimum, right? Let's see if market give us 1 to 3. Let's see. We are done for the month. See, 1 to 3. So from this innocent buy, we already have 1 to 3 from here. Innocently. Let's see if we had the 1 to 5 from here. Even 1 to 5 safe, it gave us. So if you are not greedy, this first buy will have given you 1 to 3, 1 to 5, and you are done for London. 1 to 3, 1 to 5. You are done for London session. Now we now come to New York. See what New York now did. New York now induced this buy. You can see we have an inducement, SMC in play now. And the inducement still gave us a candlestick confirmation close above bullish that day. So anything any pullback you are seeing, because normally we expect this pullback to not take out this. Abi, the pullback was not meant to take out this, but it did. That was an inducement, a manipulation. So New York had a pullback to take out this previous and close above. Now this is not your main confirmation. Now this can now be you can call it your New York buy. At this candlestick that close, now you can now use your Fibonacci for your TP. Okay, in this case now you can now use the what for your take profits from your low to your high. Look at it, very clean. It got to by extension another 1 to what? 1 to 4 or 1 to 5. So you have done 1 to 10. between London and New York. Who is following me? Is it clear? This is the bullish to bullish here. Innocently, you have done 1 to 10. So there's sometimes the market will give you good opportunity. Don't waste it. Our first buy gave us 1 to 5, 1 to 3. New York came. New York came to manipulate the previous higher low and give us a confirmation because we still close above. We bought second buy because we are trading above the. Now, if you want to use your previous days high and close as a location, this is it. Now, I want to agree with what Mr. Abbott said about location. So it can also serve as location. Okay, it can also serve as location of where the day price action will be. Because look at this case now. For it came to respect as a location level. So previous day high and close can also be a key level. It gives us the bias of what the next day will do and also serve as key level. If price is pulling back, it can serve as a key level to buy. Is this clear? Let me screenshot this. So this is a scenario of bullish to bullish. Yeah. Price. Let me reduce this. Trading below previous day high and close in brackets Asian range. London thereafter comma price traded above PDHC. So whenever you are doing your back testing, always also add notes so you can understand, read your notes, what you are talking about. Okay? So this is a note that will help me to understand this better next time. So for bullish to bullish variant, price started trading below PDHC Asian range. Thereafter, price traded above PDHC London and New York. London and New York. So let me just use LDN and NY. Good. Let's do the last one. Keep on using your Asian range SMC, but having this as an edge. This just gives you an edge. Doesn't mean you stop using what you're using. Just gives you an edge. So let's quickly go to the last one. You can see. Let's change this. Let's change this. Let's change this. Guys. Tuesday, Thursday. So Wednesday closed here. Now watch carefully. What happened again? The same scenario again. Can you see similarities, pattern, trend? When Asian opened, what the Asian range do again? Asian range traded below. The same thing that happened yesterday happened the next day. Same pattern, right? But something that happened beautifully here. Okay, now watch. What's the next move? 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 See the next move. Right? London is 8 o'clock. Why 7 o'clock is for Frankfurt. So this is for this Asian low. Good. Now what will happen? Have we gone above? Look at this carefully. We went below Abi. Now as London is approaching, have we broken above? At this point, have we broken above at this point? Look at it carefully. We have a break, it pulled back, used this as our location, right? And broke structure again, then pulled back. This is our confirmation for London Open. So if you are using your pending order, you'll have gotten your confirmation at this demand zone because you have a break of structure and price is pulling back to this demand zone. Boom. If you miss that, you can now use this particular candle close at 820. 820 is the London buy confirmation for candlestick at 820. Okay, why at 8 o'clock? 8 o'clock is for your pending order. 8 o'clock is for pending order confirmation, while 820 is your candlestick instant market confirmation. Above, we have broken, we have retested. Nothing again. The day is bullish. Nothing again you want to talk. The day is what? Bullish. Because we have done what the markets below, above, break. Can we go and work with this? Can we go and work with this, everybody? So let me put a note again to this. So this was a case of bullish to bullish. That means previous day was bullish. This was a bullish to bullish variance. Bullish to bullish. Now my note will now be price started trading below PDHC. And what was that? It was simply Asian range. So we won't take that seriously because originally, if price trades below previous day close, we should be selling. But in this case, that below it is trading was in Asian range. Assuming that was happening in London session, we will take that below seriously for a sell day. That's the difference now. If that below is happening during during the London or New York, we will take that sell seriously. But if that sell is happening in Asian range, we see it as manipulation. This is so powerful. So thereafter, what happened? Thereafter, what happened? Price traded above. Price traded above PDHC, which is what? London and what? New York. As simple as that. As simple as that. Simple as that. So let's go into today. Let's see what today has been is doing for us. Let's go into today now. Let's go into today because we're already in learner section. Let's go into today. Let's see what today has for us. I want to beg us, please, take out time for personal retreats. These are things that you get when you spend time with yourself. These are things you get. And let me not even shock you. You can also invent your brainchild. Like you already have the concept, right? You have the concept. You can in your place of retreat bring out your own. You can come up with something else aside from this. This is my own. You can still come up with something else. The market is so dynamic. It's so dynamic that you can come up with your own inventions, different ways of how to trade the market, different ways. It's playing out. Let's see how today is playing out. No stress. Don't force the market. The market will come to you. It will come to you. So now look at this now. Look at what is daily, Abby. Yesterday closed what? Bullish. What do we do? We mark out what? Previous day what? High and close. That's step one, right? Step one, previous day high and close. Step one. Step one. Step one. Step two, drop down to what? Your 15 minutes, 5 minutes to now know, is there a manipulation or is going to be the made move? Now looking at this, Asian low. We already have Asian range trading below. So in this case, until price comes to trade above, we term this to be bearish day. Am I communicating, guys? Until price comes to break above, price will want to have a bearish day. So before anybody else, I can predict and say, if price respects this and give me confirmation, right, I'm going to be bearish for the day. So Tuesday at 23 o'clock, coupled with our Asian high, Asian low. So what's Asian high, Asian low giving us? This Asian high, and this is Asian low. So we are patient. We are patient. It's either it's going to give us a bullish to bearish or a bullish to bullish. Like I said, for a bullish to bullish, I must see price what break out. We test during London around 9 o'clock thereabout, and I continue. I target this my previous week's what high. That's my next target. If you are bullish, next target. Okay. If you are going to be bearish, I want to now see a proper bearish market structure giving me bearish direction to now sell. Where's my target? Here and here, targeting this. So now we are still watching. Let's add our what? Our previously high and low as a premium and discount confluence. Like I said, we are still going to apply every other thing we use. We are not leaving anything out. Asia range is positioned at premium zone currently. So we have a more high chance of selling. When I want to buy is when I see a breakout. I don't have business buying until price what breaks, then I buy. I have business selling when I see a possible sell, curious to what to sell, and I sell down to to close for the day. So these are the scenarios for today. It can't be more than this. It can't be more than this. So our job is just to wait patiently to what to come to us. Allow price to come to you. Write in the chat box, everybody. Allow the market to come to you. Write in the chat box. Allow the market to come to you. Allow the market to come to you. Don't chase price. From this now, it's so clear that market is not ready yet. So clear. So clear. Market is not ready. Allow the market to come to you. Don't chase price. Everybody, everybody, everybody. So we are done. We are done. We are done for the day. I need to rush. I have some appointments this morning, so I need to step out. Observe price action as it gives us. So this Euro USD setup today. Allow the market to come to you. I'm done. Yes, I'm done. I'm done. Don't chase price. So these 3 points of mine, I hope I'm able to convince you and not to confuse you that trading is not hard. You can see now that it is your process that make it hard or difficult. You can simplify whatever is complex. You can simplify whatever is complex. The only hard thing now is to follow discipline. Make this hard. We have the edge already. Is if I see this, I do this. If I don't see this, I don't do this. That's all. So it's now discipline. Now say, okay, I won't do this when I see this, and so on and so forth. So I think let me take questions quickly. Yeah, we call it today. Is there news today? If there's news today, it's going to make sense. Just wait for the news. Before news comes out, we'll have, let's see. Uh, and mind you, yesterday the news was bad for the dollar. Hence, we saw why the market also bought. So fundamental two also what aligns with technicals or whatever you call it. So retail sales yesterday was what less than expected. And for your news, when your actual is greater than forecast, is good for the currency. But in the case, the actual was less than forecast. So that means this news was not good for the dollar. So more reason why we saw EU buy. And this is 130. But you are not bothered because since morning, you already know the market will buy on EU. But now afternoon is just like putting your morning bias in alignment. So the news will always align with your technicals. You don't have to stress about news. Okay. So we have card news, CPI in the afternoon. We have CPI in the afternoon. So okay, very quickly, let's do for USD card before I go. Because we will trade USD card in the afternoon. Okay. To show you that this is not only about EU, it's every currency pair, every market. Go and try this on gold. Go and try it on oil. If the market has candlestick, go and try it. The question is, does the market have candlestick? If yes, go and try it. Should I do USD card? Okay, where will be our location in this market? About timing. Okay, good. So location, let's see. Like I said, allow price to first give you, in this case, no direction yet because price is still trying to range in the Asian range. So location for a buy, price must break out retest, then this will be our location. Or when price now gives us price action, demand zone that creates here is location. So for the buy scenario, when price breaks out and retests, this becomes our location, or the demand zone that is being created when this buy is happening is location. For the sell, when price breaks out, because we are still buying, you come back down to 5 minutes, we are still bullish now. Look at this, is still bullish, break of structure, right? This is still bullish. So our change of character will come. Let me come to 3 minutes. Look at, we are still very much what, bullish. Okay. So on a lower time frame, safe, our first sell will be what, this break, because this is still what, break to the upside, higher high. I want to say a what, a lower low. That means my Asian low will be broken out. When it breaks out and it's pulling back, by then you know your location. By then, we can't say location yet because market is not. I don't give no direction yet. So there's no direction yet in this condition. Do you understand? No direction yet in this condition. We are still accumulating orders. Even if you want to do 1 minute, if you want to do 1 minute character change, this is 1 minute. But like I said, 1 minute, 1 minute must take out this first. 1 minute to sell, but it is risky. Why? Because this is just one. I must see 1, 2. So we are still like waiting for this hole to pull out. So there's no direction yet, because this is still very much what, bullish. For us to sell, we must see a break out of this higher low. Then for us to buy, we must see a break out of this what, previous day. Is that clear? Okay. So what do you mean by timing? When you said timing, what do you mean by timing? When you say timing, as I go to my USD card, so I go to what, daily time frame. What do you do? Just look for your bullish, bearish, and all that. Let's pick one example. Let's say, what should we do? Let's start with this first. Let's pick Monday to Tuesday. Let's just backtest these two. Then we're now coming to, let's see. Is there a precise timing to get into the market? So 5 minutes for candlestick, yes. 5 15 minutes is confirmation. I said that already. 5 15 minutes. If you are using candlestick confirmation, use 5 minutes so you can get a good stop loss. Okay. For candlestick close, use 5 minutes for a good stop loss. Then for your other block also, 15 minutes and 5 minutes for refinement. So for your other block on pending order, use 15 minutes order block, then 5 minutes to refine, like the one we did there for EUSD. Look at current market, I use 5 minutes because 15 minutes candlestick will not give me a good stop loss. Okay, minutes candlestick will not give you what, a good stop loss, but 5 minutes candle will give us a good stop loss. Let's go back to that. So this is it. This is 15 minutes, right? You can see that the rejection that happened here. Look at the rejection that happened. This is where 15 minutes candle closed around 16:30. But if you go to 5 minutes, you will get an earlier entry on 5 minutes. All right, on like 15 minutes. You get an earlier entry on 5 minutes on like 15 minutes. Where are you? Where are you? Where are you? Okay, I think this is it. Inducement. Okay, this is it. Shabba-ba-ba-ba-ba-ba.